Hey everybody, my name is Dave Gove with Coldwell Banker. I'm a realtor here in Truckee, California, servicing North Lake Tahoe and Truckee, and my guest today is...
I'm Luke Lewis with Cross Country Mortgage, primarily lending in California and Nevada residential.
Hey, what's up everybody? My name's Dave Gove. I service the North Lake Tahoe and Truckee, California region, and I help buyers and sellers, investors and developers achieve their real estate goals. So, a little bit crazy times, we've got all this madness going on in the world. We've got news yesterday that OPEC is going to be pinching production by, did you say 2 million barrels a day?
2 million barrels a day.
Okay. Cost of fuel here in Truckee right now is over $7 for premium. That's going to be pretty scary to see what that looks like, how that ripples through the economy. Interest rates are up to about 7%.
About 7% on a 30-year.
7% on a 30-year fixed. And let's see, the Fed met, about 3 weeks ago and raised another 75 basis points. Is that right?
Yeah, they did. With projections, depending on how it works, November and December, they're looking at a possible interest rate of a combined 1.25, which means they'd be looking at 0.75 this month and potentially 0.5 in December.
Wow, so that's potentially looking at a 30-year fixed up to what, 8.5% by the end of the year?
Yeah.
Yeah, that's pretty rough.
It's a tough pill to swallow.
It's a tough pill to swallow, yeah. All right, so hate to put you on the spot, but what do you think 2023 is going to look like?
2023, if we're looking at the projections in our industry, the norm is that rates follow inflation. And so if inflation can get curbed and Fannie Mae and the Fed had come out, they're hoping that rates would be by the end of 2023 in the fours. I don't necessarily see that being accurate. If they climb so fast, they're like taxes, like they don't go down, right?
Right.
They don't go down as rapidly. So I see the projections in 2023. If inflation gets curbed, the rates will follow it, and we could see a dip by the end of 2023.
Okay.
And dip back down.
So dip back down to what? What do you think about 5?
That would be awesome.
That would be awesome. Yeah. Are any refis happening these days?
Yeah, it's all kind of client driven and needs driven. People really cashed in the last year and a half, 2 years with historically low rates, the Fed being so low. But if someone is looking at, paying off a hard money loan, buying extra property, especially if you're in the investment market, people are even now, pulling out money from their homes for down payments and cash outs. I know I personally did this myself. I pulled out some money even as a buffer, knowing what was going to happen this year. So we've seen that happen. Home equity lines are still alive and well. They're a little bit more risky because they're following the prime plus the margin, whatever that is, 2 or 3, depending on the bank.
Right.
But people are still refinancing.
You mentioned something that's interesting, refinancing hard money loans. So we've gotten so used to having this cheap money out there that you don't realize that actually 7% really isn't that bad historically.
Right.
Hard money loan right now is probably 10% with probably 10%, 2 points type of thing, like
10
that.
to 12, 2 points.
Yeah, so that's 7% interest rate. Refining out of that is pretty comfortable for a lot of people.
Yeah,
That
absolutely.
puts them in a lot better position.
Yeah, absolutely. And especially if you can save money in the short run, anticipating the rates coming back down, it's really a monthly payment aspect. When it comes to purchasing, obviously we still have some, even on a conservative appreciation, what would you say appreciation levels are? 4 to 6%?
Well, from when, I think would be the question, right?
That's good.
So we've seen prices dip from the peak of last year, or really I would say the peak would be March of 2022. Prices are back down from that 10 to 15%. However, they're still up from pre-pandemic levels. So I would say even though they've come to 10, 15% back down from the peak, they're still up 30, 40% from pre-pandemic levels.
Yeah.
So appreciation is still good.
So I think that would kind of tend to push people away when they're seeing maybe little reductions on investment. However, those people aren't flipping in 6 months to a year. If you're holding the home for 2 to 3 years, you're going to probably get your gains back.
Something else interesting you just said was, if you're a payment-driven buyer, right? So people get all wound up looking at the interest rates. Well, it's important to take a look at your payments. Like if you're comfortable with the payments that you're making, then it's still a good opportunity to buy the house because when Fannie and Freddie do get those rates back down to 3 or 4% or below 5%, I'm thinking that's a 2024 number. When those numbers come back down to the sub 5%, if you buy now at 7%, you're comfortable with your payment. When you can refinance that, you're going to be real comfortable with your payment and probably will have some appreciation at that point in time too. So if you're able to and you find a product out there that you want to buy, don't be afraid to be a buyer in this market.
Yeah, one thing, and probably every mortgage broker nowadays or loan advisor says this, the deal is marry the house, date the rate.
Marry the house, date the rate.
You can refinance 5, 6, 7 times over the course of, owning one home if you're holding it for 5, 6, 7 years. Being savvy in those things, that's kind of what I'm driven by, helping people gain wealth. One of the ways through refinance.
Absolutely. And real quick, tell us about the refinance process.
Yeah, refinance process is pretty darn simple. I mean, basically get your application in. We talk about goals, whether it's pulling out cash, whether it's doing what we call rate and term refinance, where if there's a benefit when the rate drops, or if you want to shorten the term, meaning applying more money towards the principal balance, that's one way by which you can refinance. We call those streamlines if it's a VA or FHA. Otherwise, it's just a rate and term. It's simple.
And how long would the refinance process take?
Right now,
Yeah.
there's not tons of them. So,
Okay.
I think we're down 86% from refinances last year. So we get a refinance done in under 30 days.
Holy cow, that's pretty fast.
Yeah, even on jumbo, we can get them done quicker sometimes, just depending on the appraisal that we need.
Awesome. Well, Luke, thanks for coming in today. If you have any questions about mortgages or refinancing, you can reach out to Luke at Cross Country Mortgage. And if you have any questions about real estate in the North Lake Tahoe or Truckee area, you can reach out to me directly. Thanks again, everybody. We'll talk to you soon.
Thanks for having me, Dave.
You bet.